Welcome to the Economic Empowerment Podcast, where we break down the pathways to financial growth, investment opportunities, and building generational wealth. I'm your host, Ramel Lee, and I'm thrilled to take you on this journey beyond business into a world of possibilities that many don't have the access to see. Each episode, we deep dive into topics like alternative investments, real estate, hotel ownership, and much more, bringing you expert insights, inspirational stories, and actionable advice to help you take control of your financial future. Whether you're an experienced investor or just starting to explore new opportunities, this podcast is here to empower you with knowledge and tools to make informed decisions. But before we get started, I want to remind you, this podcast is for informational purposes only. The content discussed here is not financial advice. Every investment decision carries risk, and it's crucial to do your own research and consult with your personal financial advisor before taking action. Now, let's dive in and explore the exciting world of economic empowerment. Hey, this is Ramel Lee, host of the Economic Empowerment Podcast. I know I've been gone for a couple of weeks, but I've been out learning more to bring more information back to you all. Had a great time at the Hunter Hotel Investment Conference. And today we'll be talking about the top 5 things you should focus on when analyzing a hotel deal. Hotel investing can be highly profitable, but only if you know how to properly analyze a deal. In today's episode, I'll break down the top 5 things you should focus on when evaluating a hotel investment so you can make smarter and more informed decisions. Unlike residential real estate, hotels operate as businesses. That means you need to think beyond location and property condition. You need to analyze revenue, expenses, operational efficiencies, and other stuff. So let's dive in. So as I said, hotels aren't just about location, but location is important. Location is critical because there are a few things you have to think about. You have to think about demand generators, local competition, your supply and pipeline, and seasonal trends, right? So demand drivers. Demand drivers are the things that draw people to the area that will require them to stay at a hotel, whether it's corporate headquarters, amusement parks, major medical facilities, universities, major construction projects, even highway traffic, which is a big demand generator that people overlook. Another thing is local competition in the area. Are there a bunch of hotels in the same area that serve the same customer? So hotel zones are actually a good thing if you're looking to buy a hotel, but you don't want to have a hotel that serves the same customer and also ran by the same hotel franchise, right? Because you're both competing for the same exact people. Hilton people are going to go to Hilton people, Marriott people are going to go to Marriott, but you don't want to have a flag under the Marriott brand that serves the same customer, let's say a luxury customer, too close to another Marriott hotel, Marriott flag that serves the same luxury customer. Supply and pipeline. One thing you also have to consider is especially if you're acquiring a hotel, are there going to be other hotels built in the area that you plan on acquiring your hotel at? That's big because people love the new hotel, right? So you don't want to be in direct competition with the new hotel that's being built. Also, seasonality trends. Are your demand generators or the reasons that people that come to the hotel based upon the seasons, right? Is it a horrible winter place and no one ever comes there in the winter? You need to know that as well. If it's a snow resort type area and people only come during the winter, you also want to know that as well. The second thing you want to evaluate in the hotel business is the financial performance of the hotel, right? So there's a few things you're going to want to know to evaluate. You're going to want to evaluate RevPAR, which stands for revenue per available room. As you might have heard me say before or others, a hotel room is a perishable asset, meaning at the end of the 24 hours, you can no longer sell that hotel room, right? It's done. It's over with. So what RevPAR calculates is the availability of all your hotel rooms and how much money you would have made based upon all of the hotel rooms that were available. Another thing you want to understand is your occupancy rate. That's basically how full is your hotel on a regular basis. Um, you want to also consider your average daily rate, that be ADR, right? That's how much you're charging per night at the hotel room. And you want to know if you're being competitively priced against the other hotels or other options that are in the area. Gross operating profit is very important, right? It's a business. You want to make money. How much money do you have after all your expenses are paid, right? That'll give you a key indicator of whether you need to increase your revenue or lower your expenses. And when you're acquiring a hotel, one of the great things is you can study the historical performance of that hotel, right? So you want to get 3 to 5 years of hotel data from the previous owner. And you definitely want to analyze probably longer than that, because the COVID and immediately post COVID years are going to drastically skew the numbers and the performance of that hotel. So, with any business, knowing your numbers is superly important. The third thing you want to consider is operational efficiency and management. The difference between a well-run hotel and a struggling one comes down to management. Who is currently operating the hotel? Is it uh, owner run? Is there a third party management company? That's a big thing you need to know before you buy the hotel. Labor costs and staffing. How much are the people being paid? Uh, can you afford to maintain that? Is there high turnover? Recruiting employees is much more difficult than retaining employees. Cost control. Are operational expenses being optimized, or is there waste? That's when we were talking about before about your gross operating profit. You want to analyze exactly what money is being spent on, what the expenses are, and are they being applied in a way that's going to bring additional value to your business. Have you ever stayed in a hotel and thought, what if I owned this? What if you could move from being a guest to being an owner? Hi, I'm Ramel Lee, managing partner of RDL Hotel Fund 1. We've created a unique opportunity for people like you to invest in hotel ownership, an asset class once reserved for the wealthy elite. Hotels, especially economy extended stay properties, are resilient and generate cash flow even during economic downturns. With as little as $10,000, you can join our movement to democratize wealth and create opportunities for your future. This is your chance to build generational wealth. Don't just stay in hotels, own them. Visit us at www.rdleecp.com to learn more and take your first step today. The fourth thing you want to pay attention to is property conditions and capital expenditures. We call it CapEx, right? What condition is the hotel in? Are there any major renovations needed? Will you have to put more money in the hotel right away? Are there just simple cosmetic changes, just some FFE stuff, or are there major changes such as the hotel needs a new roof, new HVAC? Um, we also want to know if there's a PIP due. That's a PIP stands for Property Improvement Plan. That's what the franchise require. If it's a branded hotel, the franchise wants to make sure that it doesn't look like an old hotel. You ever been in a hotel and as soon as you walked in, you knew right away this thing hasn't been changed in about 20 years? And even if it's clean and the service is great, it's a bit of a turnoff. And so the brands want to make sure that when people walk into a hotel, they don't want to feel like they went into a time machine, right? Um, and like I said, the big ticket items, the mechanical systems, the roof, the plumbing, the HVAC, those impact long-term value of your hotel. So you want to make sure that those are maintained, and you want to know if they're going to have to be replaced because that's going to be part of your underwriting process when you go to make an offer and evaluate how much the acquisition of this hotel is really going to cost you. And then finally, the fifth thing you want to think about is your exit strategy investment timeline. What's your long-term goal for the hotel? Do you plan to hold and operate it for long-term cash flow? Are you going to flip it? Are you going to renovate it and reposition it for higher value? Are you going to build it up for a larger investment group? You want to understand the potential and appreciation resale value. Who are the potential buyers when it's time to sell? Does the property align with your broader investment goals? So, I always say when you're dealing with investings, you want to start with the exit in mind, right? You want to know what you want your money to do for you, how you plan on earning it. Do you want cash flow? Do you want long-term growth? Especially if you're dealing with a business or real estate asset. Is this something generational you plan on keeping in your family forever? These are all decisions that you have to have in mind when evaluating whether you're going to acquire the hotel or not. So let's recap the top 5 things you need to consider when evaluating your hotel deal. Marketing condition, right? You want to look at your demand drivers and your competitors. They matter. Financial performance, right? That's the second thing. You want to look for your RevPAR, that's revenue per available room. I'm giving you guys some expert jargon here. ADR, that's average daily rate. That's how much you charge a night. Occupancy, that's how full the rooms are in your hotel. And profitability, your gross operating profit, right? How much money are you making after expenses? The third thing is operational efficiency, right? Is this a strong management team is the key to your hotel success. Location, finances, none of that matters if your management team isn't strong, right? So is the hotel you're acquiring run by the owner directly? Will you have the time or the experience to run the hotel yourself? If not, you're going to have to consider third-party management team. And that's going to be an additional expense. That's going to reduce your gross operating profit. If they already have a third-party management team, how well of a job are they doing? You're going to not only have to evaluate the hotel itself, but you're going to have to evaluate that management team, and you might have to change that out. Fourth thing that we brought up was the property condition and CapEx, right? CapEx is capital expenditures. Always factor in your renovation costs. A lot of people just look at how much money the hotel makes, how much the debt is going to cost them to buy the hotel, but they don't consider the cost of renovations, the cost of a possible PIP. They don't do any of that stuff. And fifth is your exit strategy, right? Always keep the exit in mind, right? You want to know what your long-term game plan is, and will this particular hotel asset fit in there? So if you're serious about hotel investing and start analyzing deals, you should use these 5 factors before making any commitments. And if you want to learn more about hotel investing, scan the QR code that's on the screen, and it'll be take you to an opportunity to get our free hotel evaluation guide, right? You can learn how to build wealth through hotel investing, and it's a free guide. It gives you more information, overview, and you couple that with tuning into this podcast regularly, and you'll be ready to invest in your first hotel. All right, everyone, thanks for showing up, and see you later. Thank you for tuning into another episode of the Economic Empowerment Podcast, where we break down the barriers to wealth and create pathways to financial freedom. I hope today's conversation gave you valuable insights and inspired you to take action on your journey toward economic empowerment. If you enjoyed this episode, don't forget to subscribe, rate, and leave a review. It helps us reach more people who are ready to transform their financial future. For more resources, updates, and investment opportunities, visit RDLEHotelFundI.com or follow us on Economic Empowerment Pod on all social platforms. Until next time, remember, wealth isn't just built, it's learned, earned, and shared. Stay empowered.